Well, let's get to that stock pick. Roy, your thesis on Telkom.
So Drikus, you were right. There was a time when this was an asset strip story. So there was SwiftNet, which had value, and we saw that when it was bought out, and the fiber business as well, which we all thought MTN was going to buy. But
Yeah.
what effectively happened was, rather than it being stripped, they kept the fiber business. They sold SwiftNet. What SwiftNet helped them do was pay down their debt, and their mobile business suddenly made sense. Why?
Okay.
Because on the prepaid side, they became the preeminent data provider. So they're much cheaper than the other guys. So the guys can't cut prices to compete with Telkom. Because remember, they've got 2G and 3G customers. Telkom doesn't have those. They've got their 3G, they've got their 4G customers. Their network is 100% 4G. So they've sold themselves as cheap data out there, and the big guys can't catch up with them. That's why you've seen service revenue growth in the mid-teens, whereas the big guys are in the mid-single digits. That is a sustainable competitive advantage until those guys migrate all of their 2G and 3G customers onto their big networks. So I think for the time being, over the next 12 to 18 months, it's very durable, it's very sustainable. I like management. They're focused now. They're not empire builders. They're just delivering on operational value. And the valuation is not demanding, even after this rally.
Okay, nice. Well, let's get to your stock pick for today, Drikus. What are you choosing?
It's a UK-listed asset manager. They manage emerging market equities, but more debt than equities. So emerging market credit, basically. If you don't know, emerging market credit yields quite a bit more than developed market credit. I think developed market credit is overvalued, especially that in the US. I think there's a bit of a credit or private credit bubble, at least in the US, and the corporate bond markets, investment grade bonds, two junk bonds, everything is. I think it's over. There's a bit of a, I would call it a bubble, but it's expensive. So with the dollar that's been in retreat and money flowing back into other parts of the world, and obviously emerging market currencies doing quite well, I think that the focus will shift towards other geographies, other asset classes maybe. I think emerging market credit looks quite attractive. And if you're buying Ashmore, which is one of the largest managers of those in the developed world, and listed, you're buying it for song, basically. It's sitting at a 10% plus dividend yield, high teens price earnings ratio, and it's basically an ungeared business.
All right. Well, thank you so much for those interesting insights, gentlemen. Really appreciate your analysis today. And that is all for tonight's Stock Watch. Thanks to our guests, Roy Mutooni from Sanlam Investments and Drikus Combrinck from Capicraft. Be sure to tune in on Tuesday at 5 p.m. as we'll be bringing you the JSE Stock Picks event. That's where South Africa's top market watchers will be giving you their best stock picking tips right here on Business Day TV. Up next, though, the close. Stay watching.